what I believe can happen for AMC in the near term is if it is able to maintain support above its 50-period moving average, it can push again to touch its 200 daily moving average. Hello everybody, my name is True Demon and I'm the Devil Stockbroker. For this AMC update, we're going to take a look at the recent price action, analyze the short interest, and see what is on the table for AMC's options chain to see what kind of potential there is for a short squeeze. I know it's been a little while and I've been a little bit quiet about AMC, not because no work is being done, but because I like to be very methodical about how I approach these tickers and take my time with my analysis. First things first, let's take a look at the long-term trend. AMC's been trading in this descending regression channel for, well, over a year now, going on a year and 6 months, since June of 2021 through till November of this year. And we are now starting to show signs of what may be a double bottom pattern forming. If we go over to the weekly chart, you can see that there is a consistent pattern here where the market found a bottom, and we noted that AMC touched but did not break this level of support. So I'm going to adjust this very carefully right here. This area where AMC's price action was able to drop down to on the weekly chart but never broke and immediately bounced, this is a weekly candlestick that confirms a double bottom pattern, and it coincides with Wyckoff accumulation. For those that are not familiar with Wyckoff accumulation, stand by, I will explain it to you in just a minute. Taking a look at some of the weekly technicals, one of the most bullish technical indicators that we have here is that despite all this downward price action is that there is some light at the end of the tunnel, starting with this potential crossover on the MACD outside of a price cloud. We have a internally developed price cloud oscillator created by the Peaceful Lizard on TradingView. If you're not familiar with this indicator, highly recommend it. It's proven to be one of my most profitable trading strategies on all market tickers. Moving on, one of the most bullish indicators of AMC has consistently been its OBV, on balance volume. Now, I use a very specific indicator for this called the volume direction candles, which is a OBV that uses the price action and momentum and takes this into account when drawing candles rather than a line chart. Secondly, it has moving averages, which show trend line support and resistance. As of last week, we have been trading underneath this moving average, this fast moving average on the volume direction candles. But if we drop down to the daily and zoom in just a little bit, you can see that we have just recently broken through this moving average just on Friday. Now, this comes after a very bullish earnings call from AMC, where Adam Aron announced that the liquidity of the company was extremely strong and that their competitors were struggling, leaving AMC in an excellent position to buy up more movie theaters, which would increase their holdings and therefore their long-term profitability. Putting this together with other indicators, we have bullish divergence on the RSI that showed up after AMC had made a new lower low in its price chart, but we see that we have a higher low in the RSI for the first time in this last 3 trading months since August. And now we actually have good conditions in the market which can allow AMC's price to rise back in accordance with the bull thesis that was set up by apes many, many months ago. On the daily chart, we also have a confirmed crossover on this PPO indicator, which actually follows a crossover outside of the price cloud. This is one of my personal trading strategies that I use in order to trade stocks to the long side or in opposite directions to the short side. But right here, we're looking at a long trade. This first crossover, which was a bullish crossover, occurred when AMC hit a new low. I did not take this trade. In order to for me to produce a buy signal on this, I need to see a crossover outside of the price cloud at least once, followed by bullish divergence. We did get that signal right here, but again, did not buy at the time, although this would have given you a positive 30% on AMC's price action. However, since I did not take that trade, I actually waited out the volatility until earnings came, knowing that market makers and hedge funds were likely going to push AMC down going into earnings in anticipation of a bad report. However, AMC surprised with a positive 14% on its earnings per share and a positive 4% with an additional $44 million in revenue than expected. AMC has posted 2 back-to-back unseasonably positive earnings reports in the last 2 quarters, indicating that AMC's position is strengthening and that they are getting more customers coming into theaters every single week. Now, as for this buy signal that I keep talking about, in order for this buy signal to be produced, I need to see that MACD crossover followed by a RSI bullish divergence. And although it has not printed yet on my indicator, I can see it here because the RSI has produced a higher low with this lower low in the price action followed by a bullish breakout. Now, AMC is going to run into some resistance here, so I do expect some pullback going into next week early on. For that, I would anticipate at least a 38% fib retracement on AMC, bringing the price back down to around $6.50. This would be my ideal entry point for some calls or just a straight share position. Earlier, I mentioned Wyckoff accumulation. What is Wyckoff accumulation? Well, Richard Wyckoff, who was a stock analyst during the early 20th century, he's largely considered to be the father of modern technical analysis in the stock market because of the unique methods that he developed back then in the 1910s and 1920s, which are still used today and prove to be true broadly across the market over the long term. Specifically, Wyckoff accumulation speaks to a pattern and cyclical behavior of stocks in the market. In the case of a overall selling pattern or a selling cycle of a stock, we can see that AMC fits the profile for a stock that has been in a perpetual selling cycle continuously. However, what we also notice, as I mentioned earlier, is that the volume direction candles, which act as sort of an indicator of volume to either the buying or selling side, there's been this consistent plateau in AMC's volume chart. This indicates that despite the downward price action, there's not been very much changing of hands with shares. So there's generally speaking been an accumulation of shares occurring, either consolidating to just a few institutions or just a general net purchasing of shares by the entire market overall. And this is a bullish divergence in the OBV indicator that you would normally be using. However, now because I have this volume direction candles indicator, which I want to shout out to that guy Astro for calling this out to me many months ago, I've started using this more consistently. And what I'm seeing currently is that AMC is now entering what could be a accumulation pattern, showing that AMC's price action is finally turning positive after a long period of selling. In particular, what calls this out to me is these moments in AMC's price action where it had these large sell-offs, this first one leading to an initial resistance that was created from this point forward, and then a new resistance that was retested in the months that followed. We've since established multiple areas of support, with the lowest one being recently broken here in this month of November. This lowest level of support that we haven't seen since AMC was trading back in April of 2021 before its massive squeeze in June, this is the first time that we've revisited this price level, and we see that it rejected it strongly afterwards. Now, at the very bottom of my chart is actually a Wyckoff accumulation heat map. This is an indicator that I just started looking at, and I compared moments of accumulation in AMC, GameStop, BBIG, and a couple of other squeeze stocks that I can historically look at. And what I notice is that each of these squeezes show a period of sloping momentum where the price was in decline and accumulation to the upside, showing that volume was growing, was consistently happening before the big squeezes that saw AMC rising more than 600% of its value. In the case of GameStop, GameStop jumped from $2.50 at the start of its squeeze, rose to $30 over the course of 8 months, and then finally went from that $30 all the way up to $400 in just 1 month of trading. And now we're starting to see a very similar pattern in AMC. because the volume, which started to grow as the price was in decline, is starting to show up again. Now, AMC, if you notice, there's this plateau in the volume direction candles. And the closer that we get to this slow moving average, the more likely it is for there to be an accumulation event. A large institution buying up shares at a price that is what they consider to be fair. And you will notice that every time that we've dipped below this fast moving average, there was eventually this point where accumulation started occurring again. And this always happens just below that moving average. And then the price, once it breaks above that fast moving average, when the volume starts to really pick up, is when the price also starts to really pick up. And this happened multiple times in AMC's past trading history. So, could this be happening again? That's the question. We're only just now seeing the beginning of it, and it is possible since the market is starting to see a bit of a bull rally. So if that is the case, and AMC does continue to maintain this level of support, specifically holding above its 50-period daily exponential moving average, that's this green line here that shows AMC's trend, if the price can get above and hold this level of support, then that would be an extremely bullish event, allowing for more volume and continuous accumulation to occur at higher price levels. Now we're going to move on to the short interest and see how this can confirm a Wyckoff accumulation and potentially culminate in a short squeeze. The first thing that I want to point out is that AMC has been at max utilization. That's 100% of its lendable shares have been lent out for short selling since February 8th of 2022. At that time, the days to cover on AMC were 2.5 days. That means that if every single person who was short attempted to cover their shares at the same time, it would take 2.5 days based on the 30-day average volume of AMC for them to cover. Note how the short interest in AMC, despite max utilization, oscillated around quite a bit. We're starting to end up right around the midpoint of where we were in February of 2022. In general, I would say that shorts have had their fun. They have, over the long term, made money if they started shorting from this point when AMC was trading just under $20 and held throughout this entire period. However, you will note that there were these massive periods of volatility where shorts lost significant portions of money, and if they exited their positions during these upward price momentum periods, then they would have suffered some severe losses until they were able to re-enter short positions going to the downside. To assume that the shorts in AMC made perfect entries and perfect exits is extremely unlikely, but by being conservative like this, we can give ourselves the worst case scenario for ourselves, and if it's still bullish, then we know that the truth, which is going to include margin of error and human error, will be likely much more bullish. I'm going to point two other very specific areas in this chart. Namely, I'm going to add the number of loans for shares on loan and the average days for shares on loan. That's the gray and the blue lines. Notice that there was a big increase in the number of loans and a massive decrease in the average days on loan. This, coinciding with a massive rise of short interest in a short period of time, indicates that shorts generally were adding to their positions. So there was a big increase in the number of shorts in AMC starting in around late August to early September. This is important because AMC's price trading in this area was somewhere in the range between $18 on the high side all the way down to $10 on the low side. From this point, we can assume that based on the number of days on average that shorts were holding their position, or the days on loan, was increasing over time. This means that shorts were holding their positions, hoping to get more out of the market and see AMC's price decline further. Up until today, this would generally be true because they've seen the price of AMC decline from $20 down to as low as $5, and yet we still see the average days on loan and the number of loans on an increasing trend over time. This means that long-term short holders, those that are holding their shares short for more than 30 days at a time, are generally winning. However, they're still holding on to their positions. They have not exited yet. Something I would also like everybody to take note of is a massive leap in security lending volume on particularly unique days in AMC's trading history. Back here in the 7th of March, there was a huge surge in security lending volume. The day before, it was at 9.6 million shares lending volume. The day after was 69.9 million. We'll just say 70 million shares in security lending volume. This was a very drastic amount of shares being shuffled around. Well, on Friday, October the 28th, AMC had an even bigger record lending volume of 109.8 million shares transferring hands in the security lending market. What I find particularly interesting about this day, October the 28th, is that this was also the day following Apple's earnings report. There was, in fact, a massive reversal that happened in the market when Amazon dropped massively and Apple reversed to the upside on the same day. If you'll take note on this particular day, see how Apple had risen a massive amount and Amazon gapped down big time just a couple of days before AMC's earnings report. Now, while I don't believe in conspiracies, I do believe that all things in the market are connected to each other. And I do happen to believe that there is a correlation between massive movement in the market on the S&P and AMC. And I'm also very adamant that the crypto market is linked also. Namely, the fact that just 2 days before AMC started its bull run, the FTT token, which is attached to FTX Exchange, which if you guys haven't been paying attention to the news, is linked to Sam Bankman-Fried, who is the CEO of FTX Exchange, which is proven to now be totally insolvent, has $0 on a balance sheet as large as $16 billion after they lent almost all of their funding to Alameda, and they turned out to have lost absolutely everything. And overnight, FTT went worthless. On the 8th of November, this is when this happened, and then FTT USD collapsed. That is exactly 2 settlement days just before AMC started to squeeze. And I've seen people speculating on social media that the FTT tokenized AMC security is linked to this, and you are right. You are 100% correct. In fact, the reason I believe that we're seeing a huge squeeze across all of the market is because there is a massive exodus happening right now in real time from the crypto market, as all of these institutions and entities are fleeing into stocks just with perfect timing that coincides with the CPI printing its first drop in its inflation report at 7.7% instead of the expected 8.1%. Normally, this would be bullish, and it does translate to a rally in the market, but it comes at oddly perfect timing that this bullish CPI report is being printed at the same time that one of the largest crypto exchanges has been shown to be totally insolvent and are now in the process of being liquidated. Worse, their exposure is now creating more counterparty risk to already bankrupt institutions like Celsius and Voyager. This is going to create a massive wave of defaults for institutions. Make absolutely no mistake. With AMC, I believe that institutions that are short on AMC are now going to be absolutely scrambling for the door to try and get their cash all out of stocks, equities, and short positions, consolidate a pile of cash, and get ready for a massive storm because it's coming. AMC is no longer the big fish for them. However, there are many institutions, I feel, that are still heavily short in AMC that are not prepared for what's about to come. And I think it's not just AMC that's going to see a big surge in its value. I think that we're going to start seeing short squeezes across the entire market again. And Hell's Trading Floor is going to be looking very closely at all of the factors and all of the stocks that we see potential in for a short squeeze to happen in the near term. Please be aware that this liquidity crunch is not just going to affect crypto and stocks. This is going to hit a lot of companies. Because what very few people are going to be able to see is the domino effect as this begins to ripple throughout the entire financial sector. Many banks that are tied inextricably to all of these institutions, which are now going to be suffering from all their counterparty risk, are now going to start to panic, and they're going to start pulling their money out of different locations, starting with crypto. If you are in the crypto market right now, This is probably the time to get very concerned about where your money is stored and start thinking about exit strategies. Honestly, the dominoes have already started to fall. Any other exchange that is tied to FTX in any way is going to suffer some losses from this. And this is going to have effects for any other institutions that are linked to those exchanges. There will be a big ripple effect of this across the entire stock. So for all of you apes that are holding on to AMC and have been waiting for your time, get ready because it's coming soon. This week, in fact, AMC has a particularly large gamma ramp ahead of it, all the way from $6 to $10 and even up as far as $15. While not its largest gamma ramp to date, it is the largest one that we've had in recent memory. So this does have the potential to cause a big surge of price movement in AMC for a very short burst. If AMC can get legs underneath it, then this can send its price up as high as between $10 and $15 in the short term before we see pullback and retracement. If AMC holds up support at that point and the market is still going forward bullish, then that could be the moment that AMC punches through all of its previous resistance. And if a catalyst turns up of AMC buying more theaters, which was alluded to by CEO Adam Aron, then all of these catalysts together could signal a new short squeeze in AMC. Take especially careful note that AMC short exempts skyrocketed in the last 2 days. We saw short exempt volume jump from 238,000 the day previous on November the 9th, all the way up to 735,000 the day after, with only a 1.7 million share increase in short volume in total. The day after, we saw 13 million short volume increase, and the short exempt volume still remained extremely high at nearly 450,000 shares sold short exempt. We've also hit the first of my 3 signals showing that AMC's 5 SMA delta rate skyrocketed above 5%. If this trend continues and we see at least 2 more days of price action with the 5 daily simple moving average moving at a rate of 5% to the upside, then this would meet all of my qualifications for a short squeeze to occur within a 30-day window. In most cases of the stocks that I have analyzed, once this signal has been triggered, 30 days is the maximum, but most on average occur within 15 trading days. Please be aware that this is all very early, it's all speculation, and absolutely none of it is financial advice. Please understand that I am not a soothsayer, I do not have a crystal ball, and there is no way for me to 100% accurately predict the price action of the stock market. All I can do is speculate. However, in my speculation, what I believe can happen for AMC in the near term is if it is able to maintain support above its 50-period moving average, it can push again to touch its 200 daily moving average, somewhere just below $10. If it can do this before the end of this week, then it would actually threaten to put more than 6% of AMC's float in the money, causing a devastating blow to market makers who sold covered calls and naked calls short onto the market and expose themselves, allowing for bulls who purchased those calls to exercise and seize control of those shares, forcing market makers into a losing trade. Assume that there will be a lot of fighting over this price action if there is a continued surge in the market going to the upside. For Monday, I expect some retracement in AMC's chart. It's very natural and healthy for it to do this. I would anticipate for the price to retrace back to the 38% retracement level, as I said earlier, at $6.50 before pushing back to the upside and potentially breaking out past this 50-period moving average, like so, consolidating and testing support before going on its next leg. Ideally, in a bullish scenario or an extremely bullish scenario, AMC would complete this move before the end of this week of November the 18th. If it does not mean that it is the end of the world. However, the higher the stock price goes by this Friday, the more positive price action we can see going forward in the following months. I'll be keeping a close eye on AMC as it's now been re-added to the top of my list as a potential short squeeze. If you guys want to get access to more of this information and keep track of my plays, I encourage you to like the video, subscribe, and consider joining my Discord at discord.gg/hellstradingfloor through our website at hellstradingfloor.com, where you can learn how to trade the market, not just in meme stocks, but learn how to trade the SPY, the top 10, and the entire S&P 500 to make the market work for you. That's all I got for you in this video today, guys. I look forward to seeing you in the next one, but until then, have a hell of a time in the markets. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com, which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.